So, hello, 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 and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Let's do this. So, how's everybody doing today? No trade calls, no recommendations, or response for their own stuff. We're here for educational purposes only. So, let's go. As usual, it's that time of the month. So, once again, I've committed to doing this once a month open access sessions. So again, nothing's off the table, just my way of paying it forward. Let me know how sound is, and we'll hang around together for about 30 minutes or so, and I'll take any questions. Again, anything, love, life, trading, charts, you can ask me anything you want, and we'll just go through, try and tackle as many things as we can. So, sound okay, guys? Okay, cool. Hey, how's it going? Well, yeah, I mean, here yesterday, in terms of the DXY, what you unsurprisingly what happened, right? We're seeing after the data we saw yesterday, we're seeing the dollar firming up, so it's no big surprise. What's interesting is also that it's coming in line with seasonals too. So all things being equal, again, I think the market has been fairly technical and is playing out more or less as we expected or as we discussed, right? If here on the DXY, remember what we said, there's a lot of chop around this 91.30, 91.40, upper side of the range 93s, downside of the range 89s, and likely we wouldn't be surprised to see the market continue to chop around this level until we get more info, more clarity on what the Fed's going to do, right? And in the context of what happened, the Fed has told us it's all about jobs, jobs. They're happy to see inflation run hot. It's not a big deal. So for now, the market is starting to sniff things out. I think it's inevitable, right? That inflation is going to pick up, that they'll have to taper, they'll have to do something, but maybe, the latest jobs prints has pushed things down a little bit. And again, tomorrow retail sales will be interesting. And, maybe we'll have to wait all the way until Jackson Hole to get a better feel for what the Fed is thinking or what Powell is thinking. But as always, I think the easiest thing is just to trade the levels, right? Yeah, George, if you remember, I think you were in the last live session we did here. And our base case was, if you remember last month, we said April, we have all the earnings coming out, a very strong seasonal month, the strongest seasonal month for equities. And what we would have expected was to see equities ramp all the way into those earnings into the end of the month, and then to have that 3 to 5% correction that could turn into something more on the equities. Throughout that whole ramp on equities, you would expect the dollar to stay weak. And then as we get into more bearish seasonals for equities too, we'd say you'd look to sell that ramp on equities into the end of April, and then coming into May, you have those weaker seasonals for the equities, and also May is, as opposed to April being the strongest seasonal for equities, May is the strongest seasonal for DXY. So you would expect that weakness coming into equities also to coincide with a stronger move in the dollar and strong seasonals on the dollars, and a chance to use that strength to set up some swing longs on the dollar, right? And for now, it looks like these things are trying to play out. Yeah, I think the one most people, and I don't think it's the best expression of this trade, but I think most people will be looking at USD CAD, right? After we broke down here, right, and especially after we had the BOC on deck, there's very little edge trying to catch it, right? I thought it was going to come out and try and clip the 120, but right here it's attempting a positive reversal here on the week, right? And BOC, ECB, BOE, they've all been starting to talk about taper, etc. The Fed will likely follow. The question is when, but it's not surprising that once you have the BOC go, put that on deck. There's no reason to try and fade this move. Now, here what we've seen is an attempt or a try of basing, which is interesting because if you look back, basically the 120 is a level that hasn't been broken until, you have to go back to 2015 to see that level being broken. You see how in 2017 it was defended very aggressively. So, not surprising that at least on the first touch, market's trying to come in and support this. So in terms of whether it holds or not, we don't know. But this is a fairly interesting place to look for a counter trend long, right? Even if this is just going to reverse back into these moving averages and continue to trade lower, it's not an uninteresting place to look for longs, because you see here essentially after this dip we've had 1-2 days where it tried to base with no clear trigger. And here what we had is very nice action in the sense that the market clears the upside and clears the downside. Now again, mini megaphone pattern at lows, whatever you want to call it. But basically what's very interesting in this day is that you see the market clears both sides. Does that make sense, George? So it clears the weak longs, the weak shorts, and then bam, it can try to move now. So right now, as long as these lows hold, there's you've got plenty of room to move to the upside, even if it wants to hold a trend lower, right? Bigger picture lower, unwind. So clearly, and it's the same chart across the board. You see how this is trying to play out. You can look at GBP USD. Another interesting here, it's come back into this level. This level given us very nice shorts in the past. You could see this here all the way from 2017, 2018, very nice shorts, right? And here, this is, potentially setting up another move lower. Does it mean it can't break higher? Absolutely not. But, it's not the place where you'd say, oh, great, let me get leverage, let me mortgage the house and get long cable here, right? And this is trying to play out across the board. You still have Aussie and Kiwi that are struggling at these highs. And Euro that hasn't managed to hold the breakout. So everything here is pointing to Euro wanting to retest that 120. And that's going to be very, very interesting because that 120, right? You see how you're going to have this 200 DMA coming in here. So this is going to be a big, big level. And likely what you'll see here is either the dip gets bought in equities and we go back to normal, right? And this 120 holds, whether it's in a sloppier fashion or not, or we get a much bigger correction in equities, seeing those equities trying to come back towards the 200 DMAs. And at that point, you would expect Euro to break back down below that 120 and try and come back into these recent lows. So that's what's trying to play out there on the dollar. And here's just a lot of people getting chopped around because we're not getting huge. A lot of stuff is still stuck in range. But there's some interesting things trying to play out right now as we think, sure, Mr. Deadlift. I mean, here as maybe these pipeline things, we'll have to see what the headlines do. But see also crude, similar thing, right? With this dollar getting whacked, crude ripping, and this is a level, right, that the market's been defending for a long time, right? We had a very nice short here, and then the market just drilled it back up and is trying to come right back into that level, and it's still getting sold. And right here, it's likely going to be like everything else. What tends to happen with these wedge patterns, right? They'll keep on trying to knock on heaven's door here, right? And if they break lower, they tend to give back the whole move. So here, this is also interesting because if crude cracks, I would expect it to swiftly move back into the 60 mark. But again, you see how everything is, a lot of stuff is still stuck in broader ranges. So a lot of people are getting angry or losing patience because they want to see the move. They want to see the move. You know, moves will come, but you have to wait for the market to be ready, right? Remember, we're talking about, you know, look on the equities. It's been very, very pure, right? Look at this. Into the 35,000, beautiful daily reversal here, short, stop above these highs. And we talked about 34,000 coming in quick. Look at that beautiful little reversal, right? But you see here how, as we've been talking about a lot, the market being frothy and the risk really being to the downside in terms of velocity of move, you know, you can see it here basically on this, from where we are on this ramp up. You know, it took the market, what is it, 25, 30 trading days to go from A to B. And you see 1, 2, 3, how it unwinds it in 3 days. By the way, you still have that gap there that we talked a lot about, the fact that that would attract on any downside acceleration, right? So here we have to see, and again, coming into today, you had to expect what I was saying in the webinar. You know, coming into today, you have to expect sideways to up, right? You know, what are the chances of this continuing to have press, lower, over one standard deviation move to the downside every single day? You know, and even if you're short, you don't want it to do that, right? You want to see the market stabilizing a little bit. So, you know, here we're getting some two-sided action, and it's interesting. We want to see what the volume does too. But, you know, here it's trying to hold this ramp, right? And as long as it holds, it holds. What you want to watch is if it starts to get some traction below, because like that crude, you expect this to potentially unwind the whole move very, very quickly, right? If things start moving in sync. For now, it's still behaving technically. What you want to watch now is what happens at the 50 back of this move from A to B, confluence with the 10-day moving average, confluence with the 35,000 round number. That's the line in the sand, right? Strong bid above, then chances are we're going right back into the 3,500. That was just a little glitch in the matrix. We're right back up at high. Nothing happens. We'll have to see tomorrow with the retail sales data. If not, if the sellers come in back, well, then you have to assume that this is still trying to correct lower, right? And it's very similar. Hey, Miafra in the house, how's it going? And very similar action on the ES2, right? Again, remember, we've been discussing this a lot in the webinars, and I've tried to talk about it in some of the updates on the blog too, is that our base case was, and we've discussed this in past YouTube videos, is that tech was topping. Our base case was short tech, right? And rotation out of tech. So here, you'd still expect YM to outperform, both if we continue to go higher, if we go sideways, or even if we peak. You'd still expect YM to continue to outperform. Less of a tech component. A lot of the reopening trades are in here, right? But look at the ES, right? This is just, you know, we have to see what happens. This could easily ramp back into the 10-day and see sellers coming in at the 10-day into the 4,200 for the next leg lower. We just don't know. You're in a situation here that, of course, you're going to get a lot of people on Twitter, on the blogs, that are absolutely certain about what's going to happen, right? But the reality is that unless we trade back above or back below, this is likely going to be velocity of move inside range. You're likely going to see a lot of choppy action here. That's just the reality, right? Yeah, exactly. So, you know, we'll have to see. Today's going to be interesting to see what happens with the 30-year bond auction. I mean, here, no big change to what I've been discussing on the bonds, and essentially you can look at any of them. And what we've been talking about is the pretty much the importance of this range we set on the 15th of April, right? And basically you can see that the market is just chopping around, defending these highs and was defending these lows. Now what's happened is we've broken through this range, and this is very bearish, right? Usually it would be too good to be true if this went from A to B in a straight line. So here what I'm watching today is, are they going to try and ramp this back into the range? And is that going to be defended, right? Because if this area gets defended, then I'd start to have more and more conviction that we're going to end up taking this low out, and we're getting back into this move lower on the bonds. Whereas if it starts to get comfortable or rip back inside this range, you have to be careful, because this is going to be one ugly rip likely, right? So it's messy. It's really not an area where I'm a big fan of playing here. But in any case, whether you're looking at ZBs, UBs, ZNs, what I would really be focused on is that 15th of April range. That's really the key, right? You can look at it on the ZBs. You can look at it on UBs. Yeah, we got out of that trade, that long trade that I posted on the blog. Yeah, we're out. We're out when it came back, failed to hold the breakout of that April 15th range. That was a nice long, but just didn't get any traction. Any comments, any questions, anything anybody wants to look at, anything anybody wants to discuss? Yeah, it's recorded. The session's recorded. Yeah. Alex, SPX. What about SPX? We looked at ES earlier. I don't know if you have a specific question. Let me know. Gold. What's going on gold? Yeah, here on gold. Where's the gold chart? So here on gold, right? It's another one that's pretty messy here. And right now, you've got this huge wall of offers or all this resistance here inside this 1850, just ahead of this 1850 here, right? And it's just coiling, right? We got to see what happens here. It's in a really important level, because if we can break higher, you would expect this to move in extensions and really kind of leave no prisoners and catch a lot of people off guard, right? But until it breaks through, you still have to be a little bit cautious. And I don't know if you're bullish or bearish, but even if you're bullish, I would say you have to kind of entertain the possibility that it could do this. Do you see what I mean? I don't know if you're bullish or bearish, but here it's still kind of holding that downside, right? So I think here, this is a situation for me on gold where, as per your comment, if you're looking bullish, I'd rather get long here, or I'd rather get long on a confirmed breakout. Do you see what I mean? So to play for this correction, or if it's going to move an extension, I want it to break through and then get long. I don't want to get long just ahead of a brick wall, because your stop is really going to be a sucker stock, because it's really tricky to pick a specific level that's not just going to get clipped. Do you see what I mean? Okay, Raj? Yeah, silver, I've been talking about silver for a long time, and again, silver just looks like, as much as everybody wants to get bullish silver, it just looks like there's a wall of offers giving you as much as you want into these highs. So I just really, there are a lot of bullish narrative for silver, a lot of, whether you're talking about in terms of industrial, it's just, I find it very hard to put on a long here. Stop placement is tricky. It's not an ideal level. You've got so much smashing here. I think, either you have to wait for everything to pick up or maybe pick it up lower, but I just don't think it's an interesting place, at least for me, to really look at silver. Again, keep in mind, you also have to see what happens in the general risk side, on equities, on crypto, because you could easily get a situation where, we get a little bit of a de-risking event across the board, and those metals are going to suffer just as much, right? So then that's maybe your better opportunity, right? So Alex, SPX, we discussed it earlier on. If you want to look at the recording, or if you tell me what you want to see in SPX, if you have a specific question on SPX, I'll tackle it. In general, I mean, if you want to keep this easy, just look at each chart by itself, right? And that's the easiest way of doing it. So sure, just look at each chart individual. If you have a specific question, Alex, just ask. Just look at each chart individually and trade each chart, each level individually, right? Yeah, gold is just, that's not where the action is now, right? Any opinion on, opinion on BTC, on Bitcoin? I mean, are you talking about from a trading perspective or from a longer term perspective? I mean, here from a trading perspective, it's really as clear as mud. Do you see what I mean? Now, full disclosure, I'm long Bitcoin, right? From bigger pictures, kind of like, but I'm not actively trading it, right? But here, this is just as clear as mud. It's just moving on headlines. Do you see what I mean? Right? It's moving on headlines, and all the headlines aren't that great. Whether you're looking at it in terms of Elon, whether you're looking at it in terms of money flowing into other coins, et cetera, et cetera. So I wouldn't be surprised if Bitcoin stalls a little bit for a while, right? Where would I want to get long again? It's tricky. It depends on the narrative. But right here, we always talk about trying to have edge by looking for asymmetry at extremes. And you can see here in this kind of broader range I have here, we're pretty much stuck in the middle. So you just don't have that much edge to structure a really nice trade. But if you look at it, what was key here is look at it, right? It's stalling. It made lower low, and here it made another lower low. So as long as it keeps on making these lower lows, you have to assume that this is probably the path, or at least it looks more bearish than it does bullish, shorter term. Then you also have to keep in mind the broader context, right? If you're seeing a general de-risking, de-leveraging across the board, this is going to suffer too. I mean, keep in mind, as we've discussed in the past, this is a market where you borrow money for nothing and you just get long anything, right? You pick You're a gold bug, get long gold, get long metals. You love crude, get long crude. You like Bitcoin, get long Bitcoin. You like Doge, get long Doge. You like stocks, get long stocks. You get long anything, right? As long as you're short the dollar. So here in a situation, if we do have more de-risking across the board, nothing is immune, right? You don't really have a pure hedge shorter term if everything's being de-risked. So here it's just, it's a tricky location. It's a tricky location. Okay? It's not a particularly good answer, I'm sorry, but it's just because it's in a kind of clear as muddy zone. I mean, I'm sure this is the kind of area where if you're a big bear, you can construct a very nice bearish story here. And if you're a bull, you can still construct a nice bullish story. But I tend to be, I don't care. I'm just looking at the chart. I'm looking for trades. And here, this is telling me sideways to down, choppy, but it's a messy chart, right? Well, yes, talking about a messy chart, Russell's also a messy chart. I mean, here, Russell, we talked about this also on Twitter. There was a very nice short here. And, you know, see, this is a opposite, different chart to Bitcoin, right? It's probably just a good follow through. You see how also Bitcoin was kind of stalling at highs, but Bitcoin was making those lower lows, right? And here, this is slightly different because this was stalling, but it was making higher lows and it made a higher high. Does that make sense? Then once it failed, you see how it cleared everything to the downside? So here really, similar to some of the other indices, right? Unless it comes back and it can regain the 50, the 10-day, this is still in sell the rallies mode, right? And going back to Alex, it's a similar on the ES on the YM. Right now, because of the damage we've seen or the velocity of move to the downside we've seen on equities, it makes sense on a day like today to come in and look for the market to be sideways to up. But the market has shifted, right? When you're in a situation like here, you're in buy the dip mode. Does that make sense? You know, it's grinding higher. Any dip gets bought because you're keeping making higher highs, lower high, right? And here it's this break of this attempt to rip higher after a of a topping process. This is just flipped here, right? So now the focus is on, as long as we don't get back above this zone, the focus is going to be on selling the rally for a move back into the 2000, which is still my base case. And as I've just said, you know, you'd expect Russell and NASDAQ to underperform YM, especially if we continue to see data supporting inflation rising, Fed have to taper, rates going higher, right? That's gonna, you know, that's really bad news for tech and for the zombie Russell companies, right? And that's similar to the situation you'll see on, you know, on ES, right? That's similar kind of action. Does that make sense? What's going on the Nikkei? Well, what's going on the Nikkei is that basically the BOJ hasn't bought any ETFs for like 2 days, right? So that's what's happened. Here, you know, this is, again, an ugly break. Would you expect this to stall and bounce a little bit? Sure. But here, you know, in a similar fashion, as long as it doesn't get back above this zone, it looks like it wants to come back down into the 200. You know, what it needs to do, it has to break, right? It has to break this downside Momo to change. Here we flipped shorter term to sell rallies rather than buy the dips. It doesn't mean a headline can't come out and these can't go screaming higher. It's just that shorter term is just kind of the Momo's flipped. That's all. don't be stubbornly bullish or bearish. Just let the chart guide you, right? Andrea, copper. I mean, here on copper, I mean, it's kind of like lumber. I have zero interest in trying to play here because you'll likely get your head ripped off, right? So is this extended? Sure. Look at it on the weekly or on the monthly, but it's through, it's through these highs. And chances are, unless it gets back down, all the dips are still going to continue to get bought. Because here, you had everybody trying to short it that was getting killed, and then you just got a little bit of a breather because equities corrected a little bit. But this is still above the 10-day. Hard to say this is dead. Do you see what I mean? So I think especially if you're looking for a mean reversion play, there are far nicer trades out there. And in general, especially if you're a newer trader, I would stay well away of trying to pick tops or bottoms on commodities because it's a very dangerous game, right? Sooner or later it will turn, but I think there are better ways to spend the day. We've been going for about half an hour. Man, time flies when we're having fun. Any other comments, any questions, any chart we haven't looked at, anything anybody wants to look at? Yeah, keep in mind, what is it, about 2 hours time? We've got that 30-year auction. That's going to be interesting. Yeah, you have to, it's hard to think about weekly close now because of tomorrow, right? A lot of people are going to be looking for that low, pre-OPEX low today or tomorrow because we've got OPEX next week. But I think it's a very tricky call here as we go into tomorrow because tomorrow we've got retail sales and we'll have to see what happens there. You really have a risk of the market, if it stays bid, continuing to squeeze higher, completely puking tomorrow. And the only thing I would say is after the retail sales number and the cash open, if we start a grind higher or grind lower tomorrow, it's not one you want to fade because it could easily continue all the way until the 5 p.m. close. My pleasure, Angela. Thanks. Italy 40, which one are you looking at? Do you have a symbol here on, it's the MIB here on TradingView? That's end of day. Thanks, Angela. Good. What is it on TradingView? Was it IT40? What is it? Is it this? Okay. And what's your question on this? I mean, here, really what we discussed, we looked at these a while ago, and what we're saying is everybody was dunking on Europe. And what we said is, keep in mind, look at how quickly the UK got their act together in the vaccine. And our expectation was that they're going to get their act together in Europe. And as Europe started to get all those jabs out, they'll want to reopen for the summer, especially the southern economies, Spain, Italy, etc. And so our trade is, we thought, especially going into April with the equities ramping, we liked the short US, long either Euro 50, especially long Spain or Italy, right? And but here we're still kind of stuck here. I don't know what's your question on it. Here it's just, it's kind of hovering here. There's nothing much that's happened. We had the big March puke, which we still haven't recovered. But as the situation improves, as the economy continues to reopen, you'd expect this to continue to stay bid. Unless everything crashes, but you'd still expect this to outperform even NASDAQ. Do you see what I mean? And here, essentially, whether you're looking at it short term, nothing's going on. Sim Yaffer, this is what I talk about. A lot of people struggle with these kind of markets because what is this? This has been here since 1st of April, okay? So think of all the headlines we've seen on Twitter since the 1st of April. Think of all the stuff you've heard, the talking heads since the 1st of April, and all the podcast fear and doom and whatever, joy. But it's very hard to square that with essentially this has done nothing, right? You've had the earnings euphoria, U.S. markets at all-time highs, then U.S. markets puking, then Elon, then this, and this has done nothing, right? And these are very tricky. You have to understand the context, and you have to understand that you don't have a lot of edge when you're stuck in these ranges. And likely what also these ranges mean is that there's no real volume, no real participation here, right? So what that means, especially in terms of new institutional money, nothing's much is going here. And likely the action is going to come if we break to the downside or we break to the outside also, because you'll probably get systematic programs trigger, et cetera, et cetera. But as long as we're stuck here, it's really hard. It's just a range trade. So I think it's an important quality to develop as a trader is to always take a step back and understand when the markets are in broader ranges or tighter ranges, but especially in broader ranges, and take the market for what it is. It's a range trade as long as it stays in range. Your edge, if you're looking for a sustained move, will not become clear or will likely not materialize until we're outside of that range. Does that make sense? And the problem is if you're just listening to Twitter talking heads or trading on 1 minute or 4 minute charts, it's very hard to get a feel for the context. And context is king, context is key, right? So, and you always have to trade the time frame you're thinking of, right? So here, if you're thinking about the bigger picture, you have to step back on a wider time frame, right? But if you're trading the 1 hour chart or the 4 hour chart, it's just a range. It's even clearer. It's not going anywhere, right? So the natural tendency for the newer traders or less experienced trader would be here thinking, oh God, I have to pick a side. Whereas in my humble opinion, this is precisely when you shouldn't pick a side because it's as clear as mud. But you should understand that, and you should understand that likely the breakout side can be sustained and give you a side to trade. And usually also the other mistake retail make is when you're in tight ranges, they trade tight range aggressively with no stops, and they always get it back because it's always coming back. And then once it breaks outside, is you've eaten like a bird, you get caught on the wrong side and poop like an elephant, right? So you also have to be careful in the change of pace, the change of range, once it does happen eventually, because it will happen. Okay, is that helpful? Okay. Yeah, and it's going to be interesting because, think about it also psychologically, right, where we are. Whereas on something like here where nothing has happened, but look at something like NASDAQ, right? Essentially, from the beginning of the year, we're pretty much unchanged. Think of all the hype you've seen. Everybody who's been buying ARK, right? Anybody who's bought ARK since the beginning of the year is underwater, right? Anybody who has bought Tesla since the inclusion in the S&P is down money. So likely you're still going to see pressure in the markets unless we recover, right? It's that something has changed or something is changing. You have to realize that. I tried to comment on Twitter to make sure people don't get caught off guard, okay? Okay, guys, 40 minutes. I'll call it a day. Thank you so much for flying with 50. Thank you for spending some time with me. Hope this was useful. And I'll do it again. I'll do it again next month. As always, the sessions are as interesting as the questions are, right? Happy to help as I can. And all the best, guys. Have a great day. Bye-bye. Take care.